fair value accounting means that you'll be able to take investment gains when Bitcoin trades up, and then you'll have investment loss when it trades down, and will be separate from your P&L and your operating results. So that is good, and that will be very supportive. We expect that toward the end of this year. Like I've heard a lot of people forecasting that might go into effect by the fourth quarter. And so I think that when we go into 2024, one of the bullish factors driving Bitcoin is that accounting.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discuss about Bitcoin. According to Michael Saylor believed that a few of the variations are everyone desires money, yet occasionally they're terrified of two things that individuals in the Bitcoin community lack: the cryptocurrency. Community says it has addressed Bitcoin's partially private right. Since it's a public blockchain, you can view the transactions there. Additionally, Bitcoin is erratic. So if you address that by developing a coin that is stable and not volatile, after which you move it. And the third is a little slow, however, if you move it quickly, discreetly, and you shift it steadily. Simply fixing the flaw makes it extremely desirable, and because it now competes with the US dollar, it's too good. And sometimes you don't want to be that good. It appears to be money rather than property. Okay, right? Returning to this point, yes, Bitcoin is a form of money. It's not actually money. And lots of things Michael Saylor discussed, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Every time you move Bitcoin, it creates a taxable event. It's not legal tender. Whereas a dollar is currency, so you can move it 100 times a day without generating 100 taxable events. So in this particular case, what I'm getting to is there's not a lot of political support for digital currency right now. A year ago, 2 years ago, it was less clear, but certainly all of the actions over the last 6 months indicate that there's a rejection with prejudice of the idea of digital currency. And, if you're looking for examples, the Paxos Wells notice, the Custodia denial letter, the shutdown of Silvergate Bank, the shutdown of Signature Bank, and the rejection of stablecoins on the Canadian exchanges. That's 5 data points. You can draw a line between that. And the conclusion that you come to is it's not welcome. Now, there's 2 reasons it wouldn't be welcome, right? I'm not telling you, I'm not making a judgment whether it should or should not be. If you'd asked me 2 years ago, I would have said, hey, stable dollars as digital currency could circulate in volume trillions and trillions of dollars. It's good for the US dollar, good for the world. But the point is, it's above my pay grade. I don't make the law and I don't run the regulator. So here's why, if I'm trying to figure out why the regulators would be against it, here's the 2 reasons. One, because I can move $100 million of US dollars in a split second to a sanctioned entity, whether it's a Russian entity or an Iranian entity or someone on the sanctions list. They don't like it for that reason, because currency is in addition to be a medium of exchange, a unit of account, and a store of value, it's also a system of control. Okay, and so we're evading that control. That's KYC, counterterrorism, know your customer, all this, etc. So that's one reason they don't like it. There's another reason they don't like it. You remember when Do Kwon issued $20 billion of UST? That was backed by Luna. And then you've got another view, which is, okay, well, I've got a stable coin backed by US dollars. But, we don't know whether you've really got the dollars or don't. But here, I can be creative. I got an idea for you. What if I issue $100 billion of stablecoin backed by Russian real estate? What if I issue $100 billion of stablecoin backed by the Argentine peso? What if the Chinese issued $1 trillion of US dollar stablecoin backed by Himalayan real estate or the CNY? Yeah, so that at this point, if you're a financial regulator in the banking system of the Western world, you start thinking, well, if I can issue it against like a Luna coin, a crypto token, I mean, a better idea is, why don't I just issue it against Brazilian rainforest real estate? And what if the Brazilians issue $250 billion worth of stablecoin? Now, and that By the way, I hadn't really thought a lot about that, Ron, but if you read the Custodia denial letter in detail, all 75 pages, you see what they say is, we don't want the stablecoin circulating backed by FDIC because you might issue a lot of it. And we know you can't figure out who the 9th, 10th, and 11th holder of it will be because it'll be non-KYC. And then the third thing is, we don't want you to inspire a foreign bank. They mention a foreign bank. Like, okay, well, maybe the UAE just issues their own stable coin, but where does that stop? I mean, what if the Iranians, decide they're just going to issue $500 billion of US dollar stable coin backed by something?
Michael Saylor say the real annual return on Bitcoin is now running over 40%. It's 4 times better than the next best thing if you're in 2020, if you're trying to decide between a non-sovereign store of value-bearer instrument and Bitcoin and gold, since Bitcoin has increased by 200% and gold has decreased by 4%. You may contend that, well, that's how they're figuring it out the quickest, right they can, and it's difficult to go any quicker right now. Michael Saylor believed that what's preventing the market from moving even faster is a few items initially. The asset class is in its infancy, which implies that it has had poisonous and discriminatory regulation. For instance, treats accounting as poisonous and intangible indefinitely. Basically, it's the financial equivalent of labeling anything you wouldn't want people to purchase, since it says if all you can do is take losses, there will never be any profits. There will only ever be investment losses and never any investment gains. Let's back to the Michael Saylor interview.
It's a huge barrier for any publicly traded company and anybody that delivers balance sheet and P&Ls based on GAAP accounting. Yeah, so we've been working on this for 3 years, and FASB took it up as an issue, and it's been a project, and they've been moving forward with it. And the latest, and the community and FASB has overwhelmingly come to the determination that the proper accounting is fair value accounting. Fair value accounting means that you'll be able to take investment gains when Bitcoin trades up, and then you'll have investment loss when it trades down, and will be separate from your P&L and your operating results. So that is good, and that will be very supportive. We expect that toward the end of this year. Like I've heard a lot of people forecasting that might go into effect by the fourth quarter. And so I think that when we go into 2024, one of the bullish factors driving Bitcoin is that accounting. If you're the CFO of Facebook or Microsoft and someone says you should buy Bitcoin, it's toxic to your P&L and it's toxic to your balance sheet. For example, if you were to buy $10 billion of Bitcoin and it traded down 50% and then traded up by a factor of 10, you would be showing $5 billion on your balance sheet, even though you have $100 billion. And then if you made $5 billion a year in your core business, you would be reporting that you made nothing, right? You would be reporting that the core business lost money or made nothing, and that you somehow lost $5 billion, and so the balance sheet wouldn't be right. The P&L wouldn't be right. All your investors would think that you screwed up the core business. They'd be angry at you. They'd probably call for your head. And so the opposite is, if you have fair value accounting, you would buy the Bitcoin. If it traded down 5 billion, you would say, well, our core business made 5 billion this quarter, but we had a $5 billion investment loss. And then the next quarter, you'd say, well, the core business made another 5 billion, but we just had a $5 billion investment gain. Yeah. And then, 36 months later, you'd say, well, the core business is chugging along stably, and we have a $100 billion investment gain, and we have double the assets. And so you can see that would make a big difference. Now, there's another point that I'd make here, which is simply having comfort in Bitcoin as an asset. And this is something that everybody in the crypto industry could do to help, that's beneficial to them and to the world, which is when the public thinks that there's no difference between FTT token and Terra Luna token and Bitcoin, if they're all equated as morally equivalent and technically equivalent and economically equivalent, then you have 25,000 cryptos and hundreds of other tokens. And so the confusion of separating the difference between BTC and FTT is pretty important. If a CFO of Facebook, if they see that the entire world says, okay, Bitcoin is an asset without an issuer, then the next question is, well, can I trust it with $10 billion? Okay, here's two answers. Well, Bitcoin is no different than every other crypto, and Bitcoin is not environmentally friendly, and the energy is wasted, and so you should buy FTT token. Okay, that creates anxiety and confusion, and there's no way that the CFO of Microsoft is going to buy a $10 billion crypto token that's one of 10,000 that's backed by a team of 3 people. So that just paralyzes the industry. Now, there's another answer, which is Bitcoin is backed by 400 exahash and 12.5 gigawatts of power. And that means that if the AIs took over every computer on Earth and they used every computer in the AWS network and every iPhone to attack Bitcoin, they couldn't dent it. It wouldn't even be 5% of the hash rate. You would need all the electricity on Earth, all the money on Earth, all the computers on the Earth to slow it down by 10%. And so Bitcoin is backed by the most powerful digital network in the world. It's a nation state resistant, fault tolerant, digital monetary network. And there is no one that controls it, and nobody can change it. No government and nobody, it doesn't matter. In that case, the CFO of Microsoft says, okay, I could probably put $1 billion on that network, right? So there's what we've had in the crypto industry is kind of a divisive, sometimes divisive, confusing debate. And the better debate would be to say, well, that's a digital security, that's a digital token, that's a digital piece of art, that's a digital currency, this is a digital commodity. And once you've done that, then instead of saying, well, I could just basically be a better Bitcoin, but I don't need to use any electricity at all, and I can gen that up. The problem with that one is you start with FTT token, and then you have Luna token, and then you have Yoyodyne token, and pretty soon when you've got 19,000 different tokens and they're all fighting with each other, you're not going to get the CFO of Microsoft and Amazon and Facebook to put $10 billion on the network. And actually, what should happen next is if you're Apple and you have $100 billion of capital, and you should actually buy $100 billion of Bitcoin, which will go up 20-30% a year, such that you have endowed your corporation, you've benefited the world, you've benefited Bitcoin, you've benefited the crypto ecosystem, you've benefited your shareholders.
According to Michael Saylor, gains from your investments will be available as Bitcoin appreciates. When it trades lower, you will experience an investment loss that is distinct from your profit and loss from operations. That is excellent and will provide a lot of help. By the end of the year, that is what we anticipate. Many people have predicted that might take effect by the fourth quarter. Michael Saylor believed that one of the optimistic figures propelling Bitcoin in 2024 is that bookkeeping. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.